Hello and welcome to Person's Prognostications for Friday. It is April 5th. Let's take a quick review of what's the most relevant item here on the board. This is our trade algo room. Yesterday was kind of a flip-flop day, and what's interesting is while I told everyone we got out of the long position, J Person Asset Management did not reverse short. One of the comments that I made in the room yesterday is I think there's going to be two-sided um, trade action. And as I pointed out the other day in the volatility, I said, this one, the system has a stop in place and it's had quite a run. But my guess is that traders did not buy S&P puts. My guess is that traders maybe bought volatility, the VXX, to protect positions in their spiders. Now, what does that mean to you? Well, the system is actually still long right here, and you can see it on the board on the volatility. However, note what happened yesterday was that the system went long S&Ps, and that is showing right here. Now, which do I believe in this case? I actually believe it's going to be the S&Ps that wins out, and that the system and the volatility will stop out first thing in the morning, and then will probably initiate a short and head much lower. How much lower? I think final new lows going in to test possibly down to take a breakout if this is a trend consolidation and an extension to the downside. Just as if this was a trend consolidation, it's going to continue to the upside in the S&Ps. Let's take a look at what happened in the algo room as far as the automatic system yesterday. On the 15-minute, a couple things happened. Obviously, it's not when we have a short position, it has a profit target. Notice here it says trailing stop, because when the market goes down near the profit, it jams the stop in. Well, the market came all the way back up. I mean, so what would you want to do as a trader? I mean, where do you keep your stop there when you've already had profits? No, you have to trail the stop, and that's what it did. It took out a minor profit. Let's take a look at the way that setup started. It started with the momentum of the volume going down, so that was a valid short. But now look what happens as it starts to get rough and rocky in here, and then all of a sudden, as you start, what do I define rough and rocky? The market shows periods of volatility, wild swings. Note what we do. It goes down and it comes back and closes towards the highs. It goes down and closes towards the highs. So that shows that there was buying there. And then finally, something happened once again. Closes closer to the high. One bar did not take out the low. Next bar closes closer to the high. As all of that is going on, that's what I'm defining as choppiness, right? When you go down and you come back and you close to the high, that's a very jittery market condition, and it's not trusting. Even though you see lower highs and you see lower lows, there's more buying underneath the market. Now, how do we see that? Because when the market is going down, and we have our volume momentum indicator up for the room to see, when the price is going down but the volume is not heavy, and then all of a sudden when we get down to the lows, look, we start to see the volume momentum change. So now we get a positive green, and the market is starting to, I can't draw a straight line here, sorry. I just wanted to help you illustrate what helps to find a better buy signal. And here's the system. It took out a nice little short. The market continued down, but it was a rough and rocky road. Very tough in the day trade realm. And quite frankly, it wasn't a huge range in the market. But what we did find interesting is that the system went long. Here's your stop. Here's the first profit target. It did its job. It got out. It trailed the stop, and it kept going. Why did it get out? Because, again, as I always explain, we get out of trades in the algo setup at the end of the day when we're not here. So to carry a position overnight would be upon an individual. That's the difference between the day trade leverage on the futures and, again, the SPY system. So now the SPY system's long. The S&Ps went long into the close. Let's take a look at the end of the day. Here is what we have up in our room so that we can see this. Was there a valid buy setup in the market according to the advanced declines. Look at the orange line. It's starting to trend up. So when you get, by the time you get a buy signal in the marketplace, the volume is already moving, relatively showing that that downtrend is on weak momentum of volume. The advanced decline is starting to go up, and then you get a what? A cumulative price upside move. So that does not tell me to be short. It doesn't tell me to buy puts. It tells me that the market is recovering. It's stronger in accumulation of advances, of more stocks returning to positive net change on the day. It shows me that there's volume coming in on the long side of the market at this level, not to be short. So that's great confirmation for all day traders. Now let's move on. All right, here's what I want everyone to kind of focus in on: comments that were posted in the live trading room. The live trading room has two rooms, of course, that our clients flip back and forth. One's the algo room to see what the positions are doing, and one's the stock room of positions that were either A, in, B, getting in, or C, spotting to look for breakouts, such as the IBB. Heavy resistance in these green lines. A close greater than these green lines tells us that we can get back onto the long side of the IBB, the biotech. All right. Next, we have over here the IWM. This is a green line in the sand. We close greater than that green line of sand. 2-period closes tells me it's time to get back in on the Russell, but rather than buy IWM, we're looking for a breakout, and we're going to participate in TNA, the leveraged ETF on the Russell. We've been talking about Intel with that unweighted butterfly. That's doing okay. We had the upside potential to look for being long Disney. Tesla, we had a butterfly strategy looking for the move into the 293 to 297. We hit 296, and then boom, it crashed. So again, our targets to where the price could get to were perfect. Is Tesla out for the count? No. More than likely, I think Tesla has a chance of getting back up, but that's going to be a formidable resistance spot right there. And since we took a lot of Tesla took a lot of air out of their tire, so to speak, so it's going to take a lot to get back. It's disappointed and slapped people in the face. So now we have one position in Hess. We have Noble, so we have energy exposure. We have bought the dip in Kellogg's. We're up a little bit there, and we're long exposure to the financials via Wells Fargo. But here's the comments that I made that I think is important for everyone to see. I don't see a sector as it was at 8:45 yesterday morning, but 45 minutes before the market opened, based on the end of day on Wednesday scans. I said, I don't really see much right now, but it's going to depend on Friday's unemployment numbers and earnings. It's going to be the main catalyst, and unless official deal is made with China, that and then we need to see, keep this in mind, energy, industrials, transports, and retail to pick up steam to get the averages to new highs. That's very important. I want everyone to reread this. We need energy, industrials, transports, and retail. Again, what is retail? Retail is consumer discretionary, transports, airlines, industrials, and energy. All right, those are the components we need to get this market back in footstep to new highs. I said that we'll likely see two-sided choppy consolidation for the next few trading sessions, and the likelihood that the VXXB sells off. If stocks do not retreat, traders bought volatility to what? Rather than buy puts. There's lots of option educators out there, long stock index put options, and they're expiring, and they're rolling those positions, meaning they're adding more losses to the same trade, so to speak. And I think theta is going to likely erode those positions over in time, because the market looks pretty strong. Markets just don't go straight up and straight down, especially with the type of dynamics that we see with the next slide. Let's take a look. This chart in front of us is my 6 top stock indice sector outlook. As you can see, the S&Ps. When I say that it's tough to get a market that's bearish when you see breakouts in advanced decline, every single top stock indice is breaking out with its advanced decline, meaning more stocks are up. While we may be seeing weakness in or a hang back with Amazon and Netflix, the FANGs, everything else is moving up. Bottom line. Now, we did get a breakout in the IWM, a 2-day close. While it doesn't look like it, it closed greater than that yellow line on Wednesday, and on Thursday we closed with as you can see, that little red box and green box, it's what we call an equal and opposite, and it did hold above that line in the sand. So that means it's a positive close. So the Russell is in a position of breaking out. The next spot, and when I say breakout, I'm talking that the next spot of resistance is going to be way up here, which was back in the March area. The Russell has been the laggard. It's been the red-headed stepchild, so to speak. It's gotten no respect. And as you can see, even though the advanced decline is breaking out, it hasn't broken out. If anything, it hasn't even gotten out of its harm's way of the February highs. That can all change today as we see a lot of components catching up with the Russell. Let's take a look what I'm referring to. But before I do, I want to point out the volume. There's accumulation in the volume, which is very positive. Look at this breakout in volume. We did get a trend line break off old resistance in the advanced decline. The next phase is if it breaks out of that old February high, this thing is then going to play catch up with the rest of the sectors, and then more than likely we'll see the Russell get back up into where it all started the party from, the breakdown in late September, early October. So that is the one that has more than likely an opportunity for us. What weighs in the most that's been keeping the Russell from moving? Regional banks, financials, and small cap biotech pharma. That's the key. So as we take a look at the other sectors, this yellow line in the sand, we now have a one-day close greater than that line, but the advanced decline was certainly greater than, and the cumulative advanced decline line made another new race for the high in the S&P. So therefore, it opens the door technically for newer highs in the market. As far as the NASDAQ 100 is concerned, we did not close greater than that line in the sand, left 2 days of dojis, which is indecision, but that doesn't mean it's a sell signal. It just means indecision. What is important is that the advanced decline and the volume trend is still positive. This is not a short selling market environment. So finally, let's take a look at our scans. And what we see on just unfiltered buy signals with the PPS indicator, I'll cut to the chase. Lots and lots of maybe people are concerned now that there's going to be inflation. Things are good. Economy can grow. More confidence if the tensions relax with U.S.-China trade relationships, and you see gold miners, Kinross. Yesterday we pointed out a few gold miners, and now today, based on Thursday's trade price close, Harmony Gold. Look at this: Kinross, Royal Gold, Yamana Gold. Every small cap and every mid-size cap gold miner, Anaco Eagle Mines, off to the races in pretty stellar buy mode with very strong accumulative volume trend. So it doesn't look like it's a one-day wonder or a one-week wonder pop. We have cumulative volume trends rising. So that's a positive thing in the gold miners. So GDX, Newmont Mining, NEM, Newmont Mining as well, which has already been in a buy mode. So here's the thing. Stocks in this space have been in buy mode. Now more stocks in this space are catching up. So we seem to be on the right side with our long-term option strategy, and it seems that there is more upside coming in the miners. Now, we also have the key words. We wanted to see retail, and we wanted to see energy, and energy got into the game yesterday. We also wanted to see what? Financials. Look at the amount of financials that all generated fresh new buy signals. Healthcare. We need healthcare. We need some of the biotechs to get into the game. And you'll notice in this healthcare here, we had a few names that might pop out as a biotech. United Therapeutics, UTHR. So we did get some of the biotechs under our buy radar. More importantly, in the consumer discretionary, besides home builders, oh my goodness, we had home builders all over the board. Every single home builder that I know of is now in a buy mode from the daily basis. We have Under Armour. We have just numerous amounts of consumer discretionary stocks. Macy's had a hell of a tear. And many of you may know that we put in this week's thoughts and observations a couple names that we told people that you could look at due to the fact they had the great PE ratio. 1, Kellogg's. 2, Apple. 3, AT&T. 4, Macy's. 5, Celgene. 6, Financials, Wells Fargo Preferred, Walt Disney Entertainment. That was in this week's Thoughts and Observations. You guys got to reread this week's newsletter. In the meantime, look at the technology space. It's not great, but we do have at least some names there that have popped into buy mode. Now, let's take a look at one other equal and opposite type. Let's be fair and impartial. How about sell signals today? How many sell signals were generated? Well, not a whole lot. Steel Dynamics, so Roku, a daily. These are daily sell signals, but trading range environments. Energies, Viper Energy. Let's take a look at Viper Energy. It's been on a sideways action. So I'm looking at, when I look at a sell signal and I see that the market is in demonstrating a trading range, it's going to be in a buy and a sell and a buy and a sell. I'm really concerned with waiting for the market to break out of that range. It's still in a weekly buy, and if it gets out of that mode, it's A, B, C, D wave, and it's off to the races to newer highs. So I don't trust the sell signals when we're in trading ranges. End of story. Financials. You'll notice what these financials are. They're not banks. They're municipal funds. They are muni funds. Look at this. Muni over here. Muni over there. Here a muni, there a muni. Here's another muni right there. Eaton Vance, tax municipal. So those are the sell signals, not the financial banks. That's a good sign. That means people are taking their money out of the defensive, scared investments into what? More aggressive stance. And that's why you see retail stocks, home builders. That's a very positive outlook. That means that money is chasing the good stuff now. And that means it's chasing an economy that could expand. And that is not defensive. So therefore, the sell signals that we see here, they're not that bad, to be honest with you. We have to weed through looking at all of these numbers. Here's Square, for example. I've liked Square, the financial, at lower levels, and I look at Square, and you know what? You're going to say, gee, that looks just like the same chart John just showed. It's in a trading range. How do you trust? Here's the same type of pattern, right? If this thing gets some giddy up and go and breaks out of the highs, we're going up. Now, I don't want to be trusting of a buy signal or a sell signal while it's in a trading range. So therefore, we just ignore it and don't take a lot of confidence in that. So here we have our buy signals, our trilogy buy setups for Friday. And we'll wrap this up for you guys. I would have to tell you what I'd want to be watchful for is we've got Kansas City Southern. This is a preferred stock. So they're even buying up transportations. And that, my friends, is very positive. So besides that, we have a lot of other stocks here. Hold on. All right, I brought this into speed because I want everyone to see what is this. This is a trilogy buy. This only runs, look at the format here. This is a special buy setup that only looks at the S&P and all NYSE stocks. Now, they've either been, these are fresh new buy signals, not stocks that are already been in buy signals, but they broke out of last conditional changes. They are starting to break out. You'll see here, oh, wow, Lennar, that's a home builder. Toll Brothers, another home builder. Gold miners, as I just pointed out, and you take a look at the healthcare. Perrigo happens to be a biotech company, small pharma company there, right? Dillard's is a retail, the Buckle retail, Nordstrom's retail, and as I'd already mentioned, looking at Macy's, which had already been in a buy 3-4 days ago, which is why we put it in the newsletter this week. The relative strength improved, there's volume, and people are coming back to shop at stores. Now, do you buy this breakout today, Friday, on the unemployment day? I would tell you this. If we get a big breakout, and if the unemployment report turns out to be positive, I think regardless of the unemployment, it's just something, another hurdle that's out of the way. The big picture is what this market's after, the big game hunter. The big game hunter is China. And it's called confidence, and it's called relaxation of fear. And if you can tone down the fear on a global scale about, hey, China's upset with us and blah, 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 and the rest of the world, and we can get down to peace, guess what? People go out, it's springtime, they shop, there's Easter coming, there's consumer discretionary spending, more people have jobs, etc., etc. So now it's time to start looking at a couple things that we wanted to see: transportation, energy, and retail. Isn't that right? So IYT, just take a look at this chart on the transports, and you will notice that it's already started to break out, and it has maintained closes greater than old swing highs, and we're generating a buy signal in the transports. They're even so strong right now, they're buying KSU, Kansas City, the railroad. They're buying the preferred stock at a high. So the rails are doing great, and the airlines are coming back. American Airlines generated a buy signal 3-4 days ago, so it's not showing up on our scans. UAL, United Airline, already generated a buy 3-4 days ago. It's just continuing. So we're starting to see accumulation. Today, Friday, we close here in these airline stocks. A lot of them are forming weekly buys, which is even powerful because it shows a higher time frame. So yes, friends, this is not the time to be buying puts on this market quite yet, by any stretch of the imagination. If anything, let's take a look and be, again, I want to make sure that we're fair and impartial. Did we run stocks on NYSE and S&P 500? Yes, we do. We have it there. And what do we find here in the sell mode? I mean, I'm not sure, but I don't see anything that tells me technology, uh, sale point. Taking a look at some of these names, they're not really, not a strong concentration in anything that I see that would stand out. And again, wow, it looks like it's the same pattern, whoever this is. Look, it's a trading range. Look at the pattern. It almost looks like the last few stocks that I just shared with you. And so therefore, I can't look to be a seller. So again, we did get a lot of strong buy signals. And here, lastly, we take a look at my radar screen for the board. What's changing right now? If this was the close on Friday, and again, it's 3:51 a.m. Eastern Standard Time. It's 10 to 10 here in Paris. Let me tell you something. Diamonds, transportation. The diamonds are the Dow Jones Industrial Average. Transportation, IYT. Home builders sector, XHB. You have the materials, XLB. The industrials, XLI. All changing its format, going from downtrend to uptrend. And that, my friends, is a positive sign. Lastly, remember ITW, Illinois Toolworks. I've been writing about this and talking about this for months now. And here's the key. It might not be one of the more popular stocks to trade. It might not give you a whole lot of money on the upside, possibly, but as a harbinger of telling us how is the economy, if it's hard to imagine we're in a recession when you see a breakout and a move up out of Illinois Toolworks. And there it is. We're starting to see a breakout. The relative strength is strong, and we'll see if that volume comes into play, because if it starts to hook up, Illinois Toolworks is going to be a leading indicator, and probably one of the better ones that says, yes, the economy is doing better and not to be short the market. Thank you very much. That's Person's Prognostications for before we enter the day Friday. We'll see how we close for the week. Thanks, everyone.